the introduction of the new creditable coverage test, an important question is whether carriers can help employers stay compliant, and just as important, will they? One of the biggest concerns for employers right now is whether carriers will step up and provide creditable coverage determinations or leave employers on their own. Unfortunately, the answer isn't consistent across the industry. Some insurers automatically provide employers with a creditable coverage status each year, often in the form of a written notice or statement. Others, though, are silent, putting the compliance burden squarely on the employer. For small and mid-sized groups that may not have actuarial support, this inconsistency creates real risk. A plan could appear generous, but still fail the actuarial test under the new rules, and the employer might not know until it's too late. The reason carriers might be holding back is because creditable coverage determinations are ultimately a regulatory certification. If a carrier misstates a plan's status and an employee later faces a late enrollment penalty, liability questions could follow. For that reason, many insurers prefer to avoid taking responsibility, leaving employers to seek their own actuarial confirmation. When carriers don't provide determinations, employers usually turn to their benefits advisor or maybe to an actuary or a third-party administrator. TPAs and actuarial firms can run the test, prepare the required notices, and file disclosures with CMS. While this adds an extra step and cost, it can also ensure the employer's documentation is defensible if it's ever challenged. Employers should not assume that silence from the carrier means compliance. Each year, they should ask the carrier directly if they will provide a creditable coverage determination for the plan. If the carrier won't, they might want to engage an advisor or TPA early, well before the October 15th notice deadline, to run the test and prepare notices. And of course, they should keep written records of the determination and the notices provided to employees and CMS. In short, carriers can help employers stay compliant, but many won't. Employers that rely solely on their insurer's word may be taking an unnecessary gamble, so a proactive approach with advisors or TPAs may be the safer path.